What's going on YouTube? It's your boy Kyle Chartbully back with another video. Hope everybody is doing well today, taking care of themselves. In this video I'm going to be going over a quick breakdown on how I trade gold, some things I look for in the pair when I'm trading it, and hopefully give you guys some tips and some strategies that you can apply to your own trading strategy to help you out on the charts. Alright, but before I get into the video, want to say thank you to everybody who has reached out to me via email, just telling me the analysis channel has been helping them out. They've been getting more consistent. They like the breakdown, so just want to say thank you, and I appreciate everybody in the group. I know we're small, but we are growing. If you want to, link is in the description. It is completely free. You can join right now if you wish. So yeah, by the end of this video, if you like what you heard, please drop a sub, leave a comment, like, dislike. Just interact with me and let me know how you feeling about the video and some things I could do better, or some things that you actually enjoyed on the video. Okay, so let's go ahead and get into it. Alright guys, so here we are. I've listed some pros and cons of trading gold. Obviously these aren't all the pros and cons of trading the pair, but just a few key ones that I think are important to list. Okay, so I'm gonna run through the pros and then I'm just gonna expand on it. I'm just saying for the cons instead of going one by one. Okay, so hitting your target faster, you can trade multiple sessions, and there's more opportunities throughout the session. These are all pros of trading gold. Okay, you can hit your target with gold within 5, 10, 15 minutes, right? Let's say you have a 30 pip goal a day, you can hit that quickly. If you want to hit that goal in multiple sessions, you can do that. The pair moves good in London, it moves best in New York. So I always tell people, you want to trade gold in New York from like 7:30 to like 11, right? And on top of that, there's more opportunities with a faster pair. So the pip range is going to be bigger, your ADR is going to be higher. So you're going to have more chances to get in it. So even if you miss a move, a lot of times you'll get a second and maybe third chance to get back in, or there's other opportunities if you're skilled enough in other patterns and other things that you can do to kind of hit your pip goal, instead of maybe like a slow pair like a U-Chef, where if you miss it, now you got to wait 2-3 days for another setup, right? So that's definitely the pros of trading gold, man, is that it's going to cash you out quick. And me personally, you got to know your trade, you got to know yourself, you got to know your personality, but I like getting cashed out quick, and I like moving on my day. All right, so cons, real quick, it's going to disrespect your market structure a lot of times, especially on lower time frames. Extreme swings, larger stop losses, quicker to lose, and there's less time to gather your emotions, and you're going to need more discipline. So it's great when the pair holds structure, higher highs, higher lows, lower highs, lower lows, but a lot of times you can bet maybe once, twice a week, it's going to disrespect the hell out of your market structure. Okay, so you have to be aware of that, and you have to know when to get in. That's why time is important, and that's why I always preach the fib settings that I use. If you don't know where those are, you can go back in the previous video, just look to my playlist and you'll see it in there. But yeah, you can expect a few times of the week it's going to just disrespect, especially if you just go off of market structure alone. All right, extreme swings. So what I mean, let's say you have half a standard or something. You might be up 250, you might be down 250 within 5 minutes, right? You have to know how to handle your emotions, and this all ties into one big point, even though they're separate points. The biggest points are that you gotta deal with this pair differently than you would like an EU or U-Chef or UJ. Okay, you're gonna need a larger stop loss as well. Most stop losses, even when using lower time frames, is going to be 30 to 60 pips, and that's with you using an M5, M1, M15. Okay, compared to like a 5 pip stop loss with EU or 10 pip stop loss. Especially if you're using like an H1, man, you're looking at like 100 pips. All right, so just be aware that you're going to need a larger stop loss. Okay, and the pro that I said, it can cash you out quick. It can also bankrupt you quicker. Okay, so you can place an order, and within 5 minutes you're in a heavy drawdown and hit your stop loss. Okay, and you have to know yourself, and you have to be okay with that. All right, so even though you can place another trade because there's more opportunities, you see like, oh snap, oh, okay, yeah, I'm gonna get in right here. I'm gonna get that money back. Even though you might get that money back, right? What else could you do? you can make that loss even larger, right? Let's say you lose that again. You try again, and you see the snowball effect. You know, this is a smooth recipe to blow your account. All right. So you need more discipline. This pair is for people who aren't going to trade 20 times a day. You don't need that. The pair moves quick enough. There's enough pips to go around where you can get in, get out. You can scalp it, and I actually do suggest scalping it, but you got to have discipline. You can't just place orders every time you see a move. You have to know certain price points you want to get in at, certain patterns, and what you're trying to get out of the charts for the day. If you hit your goal, just get out. All right. So yeah, those are some of the pros and cons of trading gold. I'm going to see you guys on the charts real quick, and then yeah, we'll go from there. Peace. All right, guys. So here we are on the charts of gold. Okay. So when I'm on gold, just like I do in the analysis channel, I'm starting from the top down. And the key thing with gold you want to look for is you're looking for key levels. So you see the yellow lines right here. These are nothing but key levels. Some people say support and resistance. I say just key levels because I don't do support and resistance on like lower time frames. These are key levels where price is going or where it's been. Okay. So what I'm looking for is I'm looking for indications of price moving with gold, right? What you don't want to do is I don't want to get caught in something like this, right? Hold on. Like, let's say some consolidation right here, right? This like right here. This is nothing. And let me get rid of these lines actually. I put it back later. I don't want to get in the pair when it's doing something like this, right? I want to catch pairs where the momentum is where the momentum is going down. Like, look at this, right? Even though consolidated for a few days, it eventually pushed down. Let's say I had a key level like right here. You know, we eventually hit that. I'm looking for swing points. So what's a swing point? Swing point is going to be something like this, like lower high to the left, lower high to the right, something like that. This right here, swing point. Another one right here. I'm looking for swing highs and swing lows on the daily to kind of give me some direction on where the pair is going. Okay. Once you know where the pair is going, you have a bias for gold. The main thing you want to do is then hit your H1, right? So you want to see where the pair has been. You're still going off key levels. So let's just say, for instance, you know, one was right here. So you can see the major move right here. Push up, push up. Like I said, on the daily, I want to get in on swing points. I want to get in like right here, right? Look at this right here. Nice swing, one to the left, one to the right, and push it up. Okay. So I want to get in on swing points with gold. I don't want to. This is no good, right? I don't want to get in right there. I know you might say this, and this is easier on back testing, obviously, but you want to know, you want to have a clear direction with gold. Gold is not a pair you want to trade when it's in consolidation and you're getting stopped out left and right. You just want to get in when the move is present. Okay. This is not a pair to trade every day. This is a pair to trade a few times a week, maybe two, and especially when it's telling. So let's say you're looking at the daily, right? And you see this right here, and you see this strong candle, right? There's no reason for this pair not to keep going down, especially if you have a key level like let's say you had a key level like right here, right? I'm looking for price to get down here anyways, right? So the easiest thing to do is just go with the flow. I got my swing point. I see price shooting down, and I just get in right here, right? Now at this, it's easier said than done, obviously, on back testing. But what I'm trying to say is you want to avoid these areas of heavy consolidation with gold, okay? Because it's super difficult to trade already. So you want to get in the swing points where it's a swing high, which is these, or a swing low, which is like something like this, or this right here, okay? These are the entry points you want to look for on the daily to get in, okay? Now once you're in, you know, this is where your technical analysis really has to come into play. So this is where you use your Fibonacci, and this, if you look at my analysis channel, I break it down all the time. So Like let's say you're looking to get in around the buy zone area, okay? You saw price shoot up. Let's say you miss this candle, right? And then you get in right here. Stop loss, what I say, about 30, 60 pips sometimes. So it's gonna be like 60, but you're aiming for the key level, right? Boom, right here, right? And even what I always say with gold is take your 1-to-1 and take partial profits. So let's say you got your 1-to-1 60 right here. You take partials, you take 75% off the trade, you just let it run. Gold is going to be, most of the time, gold's going to come back and hit your stop loss when you're doing a runner. But when you catch moves like this is going to be, I would just try to swing this for the rest of the week with a runner, you know, because I can still get back in tomorrow and I'm still playing with more profit, right? So gold is just, you have to know where to get in, and my suggestion is using the fib, so you know entry points to get in at, and you're getting in at good prices. Okay, gold is always looking to reprice itself. What do I mean by that? Let's take a few days ago. Actually, there's one I was looking at. Sorry, y'all. So this is actually a good example right here, right? So we're on a heavy uptrend, right? Doesn't matter how the trend line looks, but we're on a heavy uptrend, as you can see. Few days pass by, we've been buying. We met some resistance right here. Reprice itself down here, all the way down, okay? And if you know what you're looking for, it reprice itself around here, but I'm not gonna tell you all the secrets. But yeah, reprice down here, and then move on back up, okay? Gold is always going to find a way to get trend traders, people who are looking for strictly market structure, to get them out of the trade, okay? It does this often. Let's see if I can find some better examples. Sorry, y'all. I'm just going here. I don't have this super mapped out. I'm trying to find a good example here. Okay, here we go. Here's one. So let's say we got in right here, right? Like right here. Stop loss was 50 pips. At this point, if you didn't cash out and you're looking to swing for the fences, what happened? Price came all the way back down here and took you out. You know, how upsetting is that to be up 100 pips and you're just putting it, and you're putting your stop loss at break even. That's why I say when you get your 1-to-1, just take the partials, man. It's not worth it, okay? But if you know the fib, you know where to get in at. Let's say you got in, let's just say you got in kind of late and you got in like right here. Once hit the buy zone, got past it. This could have been a W on a lower time frame like an M1 or M5, but we're looking on the M15. And you got in right here, you could have cashed out something quick. Gold is kind of hard to explain. You have to trade it and to kind of get the feel for, like any other pair. So my suggestion is really just going through here and back testing the best you can. Whatever your strategy is, you know, you don't have to trade like me. But how I break down gold is once I set my stop loss, and let's say for instance the pair is going against me, right? I'm going to cut my trade. Let's say I get in right here, right? And my stop loss was 70 pips, right? If I see it's around halfway point, I'm going to cut half the trade off. Why? Even though you can hold and it might go in your direction later on, the smart thing to do is to cut the trade just in case it hits your stop loss. Your risk management has to be on key. And if it starts going in your direction, you can always add the position back on and make up that small loss, okay? For gold, I'm looking most of the time, I'm honestly I'm looking forward to get almost an instant profit with the way I trade and go into the lower time frames. So, you know, if I'm in the M5 or the M1, I'm looking forward to almost going instant profit. So like, let's see I get in like right here, right? Let's say I get in right here, and this is just for example, and my stop loss is like right here, right? Like 15 pips, that's gonna be super low for gold. But even so, if it starts coming around like right here, I'm just gonna cancel some of the trade out, because win ratio is not so important on gold, more so than it's making money. Okay, do not be alarmed with the low win rate with gold, because if you're doing like me and you're cutting trades off early to save yourself from potential full loss, it's worth it. Okay. So my suggestion with gold, honestly, is just to look for your key levels, have your swing points, know where to get in on the lower time frames, and then base your, use your better judgment while you're in the trade. Take your partial profits, cut trades off when you start getting drawdown. If you think it's going to hit your stop loss, you can cut it completely or cut half the trade off and just see what happens. Okay. But that's going to be it for this video. I suggest you guys just let me know if it's working out for you, if the swing points are helping, if anything I said makes sense, any of the pros and cons that I said make sense. But I could definitely do a part 2 and go more in depth if anyone would like. But just drop a comment, let me know how I did. But that's gonna be it for this video. It's your boy Kyle, Chart Bully. Hope everybody